How to Invest, Masters on the Craft, by David M. Rubenstein. This book provides invaluable insights into the world of investing through interviews with some of the most successful investors of the modern era. Rubenstein, co-founder of the Carlyle Group, shares the wisdom of iconic figures from various investment disciplines, such as Warren Buffett, Ray Dalio, and Mary Callahan, offering readers a comprehensive overview of how top investors think, act, and achieve success. The book covers a wide range of asset classes and investment strategies, while focusing on the principles and philosophies that guide these financial titans. Introduction: The Art of Investing. Rubenstein opens by emphasizing that investing is not a one-size-fits-all approach. Instead, it is a craft that requires ongoing learning, discipline, and adaptation. Investors come from different backgrounds, with varying strategies and methods, but all share a deep commitment to understanding markets, managing risks, and seizing opportunities. Rubenstein's book aims to distill the common threads that run through successful investing and to provide readers with tools to navigate the complex and ever-changing financial landscape. Chapter 1: Value Investing. Rubenstein begins by discussing value investing, a strategy popularized by Warren Buffett and his mentor Benjamin Graham. Value investors seek to buy stocks that are undervalued by the market, focusing on companies with strong fundamentals but temporarily low prices. Buffett, arguably the most famous practitioner of this strategy, believes in the power of long-term thinking and patience. Rubenstein highlights Buffett's philosophy that the stock market is a device for transferring money from the impatient to the patient. Successful value investors are those who can identify intrinsic value, ignore short-term market volatility, and hold their investments for long periods to allow compounding to work its magic. Chapter 2: Growth Investing. In contrast to value investing, growth investors, such as venture capitalists and tech investors, focus on companies with high growth potential, even if their current valuations are high. Rubenstein profiles several prominent growth investors, including Sequoia Capital's Doug Leone and Andreessen Horowitz's Mark Andreessen. Growth investing involves taking on higher risk, as many startups or high-growth companies may fail. However, when successful, the returns can be enormous. Rubenstein notes that growth investors look for disruptive technologies, innovative business models, and visionary leaders. These investors often prioritize future potential over current earnings, understanding that growth can exponentially drive future profits. Chapter 3: Private Equity and Buyouts. Rubenstein draws on his own experience in private equity, an asset class focused on acquiring and improving companies, often through leveraged buyouts, LBO. Private equity investors, typically, look for underperforming or undervalued companies, make operational improvements, and then sell them for a profit. This strategy relies on a combination of financial engineering, cost-cutting, and strategic vision. Rubenstein emphasizes that successful private equity firms are those that can identify strong management teams, make disciplined investment decisions, and create value through hands-on involvement in the companies they acquire. Chapter 4: Venture Capital. Venture capital (VC) is another important investment strategy that focuses on funding startups and early-stage companies. Rubenstein highlights the importance of risk-taking in VC, as most startups fail, but a few successful investments can generate outsized returns. He profiles investors like Peter Thiel and John Doerr, who have funded some of the world's most successful tech companies. Rubenstein explains that venture capitalists look for companies with scalable business models, large addressable markets, and founders with unique visions. Timing is critical in VC, as getting in early on the next big trend or technological innovation can yield massive rewards. Chapter 5: Hedge Funds and Risk Management. Hedge funds are known for employing a wide variety of strategies, including long-short equity, arbitrage, and macro investing. Rubenstein explores the world of hedge funds through interviews with investors like Ray Dalio, founder of Bridgewater Associates, and Ken Griffin of Citadel. Hedge funds often use leverage and derivatives to enhance returns, making them more complex and potentially risky than traditional investments. However, Rubenstein notes that successful hedge fund managers excel at risk management. Dalio, for example, is famous for his principles-based approach to investing, which focuses on diversification, downside protection, and maintaining a balanced portfolio. Hedge funds aim to generate returns in both rising and falling markets, often prioritizing risk-adjusted returns over absolute returns. Chapter 6: Real Estate and Infrastructure. Rubenstein dedicates a chapter to real estate and infrastructure investing, highlighting their importance in diversified portfolios. Real estate investors like Sams have built fortunes by identifying undervalued properties, developing commercial real estate, and taking advantage of market cycles. Infrastructure investments, which include assets like toll roads, airports, and energy pipelines, provide stable, long-term cash flows and are often less volatile than equities. Rubenstein explains that real estate and infrastructure are attractive to investors seeking diversification, inflation protection, and steady income streams. He notes that successful investors in this space have a deep understanding of local markets, regulatory environments, and long-term economic trends. Chapter 7: Fixed Income and Bonds. Fixed income, particularly bonds, is a more conservative asset class, but plays a critical role in balanced portfolios. Rubenstein profiles several prominent bond investors, including Bill Gross, formerly of PIMCO, and Jeffrey Gundlach of W. Fixed income investors focus on preserving capital and generating steady income through interest payments. Rubenstein highlights the importance of understanding macroeconomic trends, such as interest rates and inflation, when investing in bonds. Successful bond investors also pay close attention to credit quality and the duration of their investments, balancing yield and risk. While bonds typically offer lower returns than equities, they provide stability and are crucial in reducing overall portfolio volatility. Chapter 8: Impact Investing and ESG. Rubenstein touches on the growing trend of impact investing and environmental, social, and governance (ESG) investing. Impact investors seek not only financial returns, but also social or environmental impact. Rubenstein profiles investors like Sir Ronald Cohen, who has pioneered impact investing, and discusses how firms are increasingly incorporating ESG factors into their decision-making processes. These investors believe that companies with strong ESG practices are more sustainable and offer better long-term prospects. Rubenstein explains that while ESG and impact investing may not always provide the highest returns, they allow investors to align their investments with their values and contribute to societal progress. Chapter 9: Public Markets and the Role of Psychology. Rubenstein delves into the psychology of investing, emphasizing the importance of controlling emotions, such as fear and greed. Investors in public markets, like stocks and bonds, are often influenced by market sentiment, news, and short-term volatility. Successful investors, Rubenstein argues, are those who can remain calm during market downturns and avoid chasing fads during bubbles. He cites examples of iconic investors like Howard Marks, who focus on understanding market cycles and acting with discipline when others are panicking or becoming overconfident. Rubenstein also notes the value of contrarian thinking. Many great investors buy when others are selling and sell when others are buying. Chapter 10: Diversification and Asset Allocation. Rubenstein concludes the book by stressing the importance of diversification and asset allocation. The most successful investors understand that no single asset class or strategy will consistently outperform over time. Instead, they spread their investments across a variety of asset classes, industries, and geographies to reduce risk and capture opportunities in different market conditions. Rubenstein highlights the importance of regularly reviewing and adjusting one's asset allocation to reflect changing market conditions, personal goals, and risk tolerance. Conclusion: the long-term mindset. Rubenstein's final message is that successful investing requires patience, discipline, and a long-term mindset. Most great investors don't focus on short-term gains, They take a longer view, understanding that markets fluctuate but generally trend upward over time. He encourages readers to stay informed, continue learning, and remain humble, as even the best investors make mistakes. Investing, he concludes, is a lifelong journey, and those who succeed are the ones who remain committed to continuous improvement and thoughtful decision-making. Final takeaways. Value investing focuses on buying undervalued companies with strong fundamentals. Growth investors seek high-potential, innovative companies, often in the tech sector. Private equity and venture capital involve higher risks but can yield massive rewards when companies succeed. Hedge funds excel at risk management and seek returns in both rising and falling markets. Real estate and infrastructure provide stable, long-term income and diversification. Fixed income investments, like bonds, offer capital preservation and income, especially in volatile markets. Impact investing and ESG focus on aligning financial goals with social or environmental impact. Diversification and asset allocation are key to managing risk and capturing returns in various market environments. David Rubenstein's How to Invest offers a comprehensive exploration of the different paths to financial success, guided by insights from some of the most successful investors of our time, through a combination of personal interviews and his own experience. Rubenstein provides readers with practical wisdom for mastering the craft of investing.